Hello, this is James Robert Deal. Thank you for visiting my website, reversemortgageattorney.us. Feel free to call me at 425-774-6611. Send an email to jamesdeal@jamesdeal.com for answers to your questions about the FHA reverse mortgage. Include as much detail as you can. Today, I'm going to give you a broad overview of the FHA reverse mortgage. I will go into more detail under each of the subjects on our website. You can see there's many topics. There are many topics that I will address under each heading. The FHA reverse mortgage is more than a mortgage. It is a multi-factored retirement tool that includes a line of credit that cannot be canceled. If you're 62 years or older, and if you have about 50% equity in your residence, you will qualify for an FHA reverse mortgage. The primary feature is that the payments are not mandatory, they're optional. This means that you can retire sooner, or if you're already retired, you can have more money available to live a less stressful life. Now, the reason why there are no mandatory payments is because you have 50% equity in the property. For example, let's say that your home is worth $600,000 and you owe $300,000 on your mortgage. You could refinance into an FHA reverse mortgage and have no mandatory monthly payments. The interest would add on at about 3 or 3.5%, while the property value will go up 5 or 6 or 7% a year in most parts of the country, in most major urban areas. But what if your spouse is under 62? Let's say the husband is 62, but the wife is 55. Before 2015, the rule was that both husband and wife had to be 62 or older, and that the spouse younger than 62, let's say the wife, had to quit claim off of title. Now, the husband could still name the wife in his will so that she would receive the property, but as soon as he died, she would have 1 year to refinance or sell. And depending on her income level, that might put her in an awkward situation. So, starting in 2015 and with amendments to the reverse mortgage law in 2021, that was changed so that the younger spouse now can benefit from most aspects of the FHA reverse after the older spouse, the husband, dies. Furthermore, when she gets to be 62, she can have her own reverse mortgage and benefit from all of the features of the FHA reverse mortgage. Now, the primary feature that the younger spouse will inherit is the privilege not to make payments unless she wants to. So if she's 55, her husband dies shortly after taking out his reverse mortgage, where he is the primary borrower, she is the eligible non-borrowing spouse. She's still on title. If her husband dies at age 63 and she's 55 and she lives to be 105, for 50 years she will have no mandatory payments. This is almost like an insurance program. Furthermore, the FHA reverse mortgage is a line of credit that cannot be canceled and it cannot be crammed down. With an ordinary home equity line of credit in second position, The bank has the privilege at any time to limit the line of credit to the amount owing. For example, let's say you own a home, it's worth $600,000, you owe $200,000, and you have a $100,000 line of credit on which you owe $50,000. At any time and for any reason, the bank can send you a letter and say, your line of credit is limited to the $50,000 that you owe, and the extra $50,000 in line of credit you no longer have. That cannot happen to you with the reverse mortgage. What if your home needs repairs? The FHA reverse mortgage is also an FHA rehab loan. Another aspect of the FHA reverse mortgage is that it can be used to buy a residence. So let's say that you live in Seattle, you sell a house, you have $500,000. You bought the house 30 years ago for $50,000, and now it's worth $1 million. So you've got the cash. So you want to buy a $900,000 home. Let's say that you want to move further north so that you can have a 5-acre parcel. You can use it. It's called the FHA Reverse To Purchase. So on an $800,000 purchase, you pay $400,000 down, and then you have no mandatory payments. And you have a line of credit, and the line of credit grows at the interest rate that is accumulating on your loan. So roughly you're going to have an increase in your line of credit of about $10,000 a year. And that's going to keep going. Now, property values in most areas go up faster than the interest rate will accrue. But what if you live in one of those areas where property doesn't go up in value, or property goes down in value? Both husband and wife have died. The heirs now have a year to refinance or sell the property. Let's say they want to keep the property in the family, but the interest has compounded, the value's gone down. Do they then have to pay 130% of whatever the property is now worth? No. One of the aspects of the FHA reverse mortgage is that the heirs can refinance the property or sell it for 95% of whatever the assessed value is. That's an additional protection and an additional feature of this FHA reverse mortgage. Also, the FHA reverse mortgage is portable. So let's say that you own a house, you get a reverse mortgage, and you decide, no, we want to sell this house and buy another one. You don't have to pay the FHA loan fee again. You move it to the next property. You will still have to pay the ordinary closing costs like title insurance and escrow, but you won't have to pay the FHA insurance fee again. Now, the typical FHA loan has a 1.5% FHA mortgage insurance fee. So let's say that adds up to maybe $7,000. The mortgage insurance fee on a reverse FHA is double that. But that's still a reasonable expense because of all the benefits that you get. Another aspect that was made clear by the Supreme Court and also by legislation is that gay couples who are married now qualify. Now, if the family wants to retain the property after both husband and wife have died, they need to talk to me about exit strategy. Let's say that they have a vaccine-damaged child who's comfortable living in that house and uncomfortable living anywhere else. So we want to set it up so that that child can continue to live there after the reverse mortgage ends. So mom and dad have both died. The disabled child is not going to have an income sufficient to qualify. And I should add that qualifying income-wise for an FHA reverse mortgage is much easier. You just have to show that you're responsible and that you pay your taxes and your insurance, and that you have basically enough to cover some of your costs. So the solution, of course, with the disabled child is to plan your wills so that you leave title to enough relatives that you trust so that they have sufficient income to qualify for a refinance. And so all these heirs would take title to the property as trustees for the disabled child. So that's the kind of questions that I can help you deal with. And I should add that my wife is a specialist loan officer who does FHA reverse mortgages. So I encourage you to use her as your loan officer, although you're free to use anybody else. The advantage is that if you work with her, you're also working with me. And I can talk to you about your estate planning, proper wills for both husband and wife, durable powers of attorney, directives to physicians, and how to protect that disabled child that you want to keep in the house. Feel free to call me at 425-774-6611. Send a detailed email. Tell me the value of your home, how much you owe, your dates of birth, and so that I can respond and provide more information for you. The email address is jamesdeal@jamesdeal.com. In closing, I would invite you to visit my other websites, WashingtonAttorneyBroker.com. I'm a Keller Williams managing broker. I can help you in all 50 states. I help people who are doing property development, seller financing, lease option deals. Also check out my political website, jamesrobertdeal.org. Thanks for listening, and check out the other videos which will cover many of the details that I've brushed over, but in more depth. Thank you and good day.